Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Wargent Property Buyers, and we're on a mission to become Australia's most trusted property podcast. Now, I'm delighted this week to have a real expert on the show. We've got Eleanor Creagh from Proptrack. Eleanor, it's great to have you on. Thanks so much. We really appreciate it.
Thank you for having me. Good to be here.
So I guess a lot of our listeners would follow your stuff at Proptrack and all of the insights and research that you guys release. But do you want to give us a bit of an overview of your background and your role at Proptrack for anyone who's not familiar?
Yeah, sure thing. So I'm an economist. I do come from a financial markets background. I am now with Proptrack, which is, for those that don't know, the data arm of realestate.com.au. And I'm working on the economics team there. So it's really all things data and analysis to kind of break down the real-time machinations of the Australian real estate market with all the kind of audience and data and insights that we have at our fingertips and provide market intelligence for various different end users under the Proptrack brands.
Yes, we often use your embargoed media releases when we're doing our own weekly podcasts. So it's great to get some real-time insights of what's actually happening at the coalface of our property markets. And there's really good granularity as well, so you can see what's happening all around the country. I was just thinking it's a few years under the bridge, but my paths would have crossed back in the day, maybe a decade ago or so, in the Devils and Details Business Insider podcast and live events and so on. And you were always right across the Aussie economy, interest rates, monetary policy, everything, I suppose. So it's fantastic you're applying all of that experience and knowledge to the housing markets as well now. So I guess one of the bits of market research that really caught the eye recently, and one that I was hoping to get your thoughts and insights on, is how the spring selling season is tracking. So I guess normally around this time of year, September into October, you start to get a build-up of new listings as people are sort of enjoying the warmer weather and they think it's a good time of year to list their property for sale ahead of Christmas. And it did seem from the latest figures, the new listings were up about, I suppose 10% higher than a year ago. And in particular, some monthly increases in Sydney, Brisbane, Adelaide, Perth, Hobart. I suppose we're coming from a low base, but what's your general take on how this is impacting the market and how we think it might track over the next few months?
Yeah, look, it's certainly interesting, and we have seen that market activity has picked up this spring. It's been pretty busy so far. So national new listings at their highest volume for the month of September, so any September since 2015. And that's the case also in Sydney and Melbourne, since 2018 in Brisbane, and since 2004 in Canberra. So we certainly are seeing a pickup in the number of new listings hitting the market. We've seen that really persistent uptrend in home prices for much of the past 2 years in most markets, probably incentivizing selling activity. But that uplift in choice that we're seeing is slowing price growth in most markets again. And it's quite interesting, if we look at total stock on market, we can really see some variation. So although we are seeing new listings starting to pick up in some of those markets where listing volumes have been very constrained, like Brisbane, Adelaide and Perth, we're still seeing that total stock on market in those markets remains very constrained. So although we're seeing the flow of new listings picking up in those markets, strong demand is really continuing to absorb that flow of new listings. And we're seeing that total stock on market remains around kind of 40% below the prior 5-year average in those markets still. But it's a very different picture if we look at Canberra, Melbourne and Hobart, say, where versus the prior 5-year average, we're seeing that total stock on market has lifted very significantly. And I think it's this balance that we're seeing between supply and demand, and variation between supply and demand across the capital cities that's really driving the variation in price performance that we're seeing. We've seen that national house prices have lifted over the past year, but behind that kind of headline figure, there's been a lot of variation across the country, with at top end of the market, prices in Perth lifting more than 20% over the past year, and at the bottom end, Melbourne, Hobart recording small falls over the past year.
It's very interesting. You've preempted my next question there, because one of the things that Chris Bates talks about on our podcast periodically is how, although the number of new listings for sale is picking up from a pretty low base, when you look at a graph of the total for sale listings, and we'll put a link in the show notes for people who want to look at the Proptrack release and research on this, it's basically a graph from 2010 of total listings, capital cities and regional areas. It kind of goes from the top left to the bottom right. Especially for the capital cities, it looks like total stock on the market is still very low. Another thing I often sort of wonder about is, obviously Australia's got a growing population. When you're looking at total for sale listings, do you take into account the number of people in Australia, the resident population, or do we have to sort of mentally adjust for the fact there's more people looking these days as well?
Yeah, it's certainly a really interesting point. And you're right, when we look at that total stock on market in some capital cities, so in Perth and Adelaide, we've got total stock on market in Adelaide down around 30% below the prior 5-year average. In Perth, it's more like 37% below. And in Brisbane, it's still pretty constrained as well, so around 25% below the prior 5-year average. And we're also continuing to see that price growth in those markets is stronger as a result of that constrained listing environment. It's providing stronger selling conditions. And of course, I think even though we are seeing that new listings are picking up in those markets, sellers are probably holding the upper hand and probably will continue to do so throughout spring. Whereas when we look at some of those other markets where it's quite different, so Canberra, total stock on market close to 50% above the prior 5-year average. When we look at Melbourne, close to 40% above the prior 5-year average. And that's been the case for quite some time. And we've seen that price momentum has been consistently weaker in those markets for much of this year. And certainly the balance of power in those markets is with buyers, I'd say. So it's really interesting when we're breaking down that kind of flow of new listings hitting the market versus that total stock on market. And we can really see that some of those markets where selling conditions are a bit softer and price momentum is a bit weaker, we are starting to see an accumulation of stock on market because demand just isn't matching that flow of listings that are hitting the market.
It's pretty tight in Brisbane, where we do most of our buying still. But you mentioned an interesting point there, Canberra and Melbourne, for example, where there's more listings. I saw in a separate piece of research from Paul Ryan at Proptrack about the impact of land tax on Victoria and the housing market down there, with more investors selling. When you break down the numbers, I guess it seems that over the past 18 months or so, actually more investors have been selling in New South Wales and Queensland as well, probably due to, I guess, higher holding costs. But it may be just a bit more of an influence on Victoria. I periodically get accused on social media of being anti-Victoria because I share media articles that talk about some of the challenges facing small business in Melbourne or the housing market facing a downturn. But in reality, I'm pretty agnostic. And in fact, I own property in Victoria myself. It's just that I'm sharing what the media's saying. I guess what I'm trying to sort of think in terms of what listeners would like me to ask here. But I guess one of the questions I get all the time is Melbourne's obviously had a challenging 2 or 3 years for various reasons that we don't necessarily need to dwell on too much in terms of the lockdowns and so on. But is the market cycle there, obviously it's in a lull at the moment, but do you see any sort of signs of stronger buyer sentiment down there, or is that being still pretty depressed?
Yeah, look, I mean, it's interesting. We've seen the prices have been falling in Melbourne now for 6 straight months, and certainly conditions in Melbourne have been subdued relative to other parts of the country, particularly in contrast to those markets where price growth has been particularly strong this year, like Brisbane, Adelaide and Perth. And then to a slightly lesser extent, Sydney. And I think there's a number of factors. It really is that since kind of mid-2023, total stock on market in Melbourne has been around levels that we've seen haven't seen since 2018. So buyers really consistently having a lot more choice. I think, of course, that pandemic overhang that you've mentioned, Victoria also has done a much better job as a state of building more homes over the past decade. So Victoria, I think, completed on average around 9.5 dwellings per 1,000 people over the past decade, whereas in New South Wales, for example, that's closer to 7.5. So that kind of more balanced conditions with respect to housing completions relative to population growth has also probably helped Victoria not see that such strong uplift in home prices that some of the other states have. But also it is that environment that we're seeing with respect to investors as well, I think that's contributing here. So we know that we've seen an uplift in the number of investors selling in Victoria, and at the same time, we haven't seen the same uplift in new lending to investors, so the number of investors buying that we have seen in other states. So tracking properties that were previously listed for rent and then sold on realestate.com.au does show that the share of investors selling in Victoria has risen. I know Paul did do some modelling based on our data, which estimated that potentially around 5,000 homes could have been sold as a result of the changes that we've seen to land tax and tenancy laws that have made maybe owning an investment property in Victoria relatively less attractive than in other states. And also there's some interesting data on active bonds in Victoria as well that shows that the number of active bonds has actually fallen by more than 20,000 over the past year. So if you kind of think about although we haven't seen the same uplift in new lending to investors in Victoria as we have in other states, we have at least seen some. Actually, the number of investors selling or the number of properties leaving the rental stock could be north of 20,000 if we look at that bond data over the past year. But certainly, I think when we look at the market in Victoria and specifically Melbourne, it is pretty interesting because if we look at the price discount of a house in Melbourne relative to Sydney, say, that discount is sitting at a historic extreme, at an extreme discount that we haven't seen in at least 2 decades. So I think there will come a point where I guess Melbourne really presents that comparative affordability advantage. We've seen that values in Brisbane have outpaced Melbourne this year, and I think we certainly will reach that kind of turning point where that discount that we're seeing with respect to Melbourne housing versus maybe some of the other capital cities is at historic extremes. But it's quite hard to pinpoint when that turning point will be, if that makes sense, because really over the past few months, we've seen that discount has just continued to grow.
That's a really good point, actually, because in terms of the timing, so I'm just thinking back to my personal journey. I was a Sydney sider like yourself, and then there came a point, this is back in the Business Insider devils and details days, and we were looking at the comparative housing prices for Sydney versus Brisbane, and it was 2.2 times as expensive in Sydney, and we were about to have kids, and I was thinking about making a change because I'm pretty restless, and in the end we relocated to southeast Queensland, partly because I thought from a buyer's agency perspective, we'd get more value in Brisbane than we would in Sydney. And yes, we did get a bit of a spurt through to about 2016 or so. But then there was a bit of a lull again. And it's only really in 2024 that we're really starting to see that gap closing more significantly as a ratio, I guess. And it's never quite entirely clear how the timing works for this stuff. But you would think if families in Sydney can only afford, say, a 2 or 3 bedroom unit, but they've got the opportunity to live in Melbourne and potentially get a house in suburbia, eventually that would become a draw card. I think just on the mobility point, one of the other interesting pieces of research from Proptrack I saw recently was just in the increase in buyers, particularly investors looking further afield from an affordability point of view. And it looked like over the year to July 2024 versus the prior year, massive uplift in investors looking in Western Australia, following the market cycle, and to some degree Queensland as well. Something that's been really topical in real estate circles has been the rise of sort of data-driven buyers agents buying in volume in some of the smaller markets, like in Western Australia or, for example, Townsville in Queensland, and that itself actually moving the market, because you don't need to bring too many buyers into the smaller markets before it starts to move prices. Is that that trend of buyers looking towards more affordable locations, are you seeing that starting to impact markets locally? Are you seeing that in your data as well?
Yeah, it's quite interesting, and we do track kind of the share of buyers either searching or actually inquiring on residential property in the state in which they are not located. And we see that share of inquiry coming from interstate property seekers jumped last year, and it's jumped again in 2024. Now, interestingly, it's New South Wales property seekers that really make up that largest share of interstate buyer inquiry. It makes sense in the context of New South Wales being the most expensive state. So likely those that already own property here find that their money is going to go further in another state that's kind of comparatively affordable relative to New South Wales. Also, part of that is probably the fact that New South Wales has the highest population of any state. But when we do adjust this data for population, we still see that New South Wales property seekers make up a really large proportion of that interstate buy inquiry. And certainly the proportion of inquiry from property seekers in New South Wales into states that are comparatively affordable, like Queensland and Western Australia, has jumped really significantly in the past year, and particularly in Western Australia. And it does make sense in the context of data that we see from the Australian Bureau of Statistics. We know that the number of new loan commitments to investors in WA has jumped 42% over the past 12 months comparing the previous 12 months. So we've seen a very large uplift in new lending to investors in Western Australia. And I think if we overlay that with our data as well, it's clear that some of those investors are coming from the East Coast.
It does seem that way. I mean, yes, I guess as buyers agents, a lot of what we do is for investors who are often based in Sydney or Melbourne, and they're looking to partly diversify and also make their money go a bit further. And I suppose there's been certainly a rise of the borderless investor. Elle, there's a question I wanted to ask you on housing supply. It seems to be it's almost a never-ending sort of news story at the moment about population growth is high, dwelling starts are running at about 40k a quarter, population growth at about 650,000 or something. And there's a lot of questions about how and when this is going to get addressed. I saw over the past week or so, CBRE had done effectively an apartment vacancies report and outlook, and they're suggesting that rental vacancies would drop over the next 5 years due to a general shortfall of apartments. They predicted rents going up 25%, which is ahead of consumer price index forecasts. And I suppose so their view is the housing shortfall is just going to persist over the rest of this decade. I don't sort of have a strong view on it either way. I just know that the market tends to work in cycles, and we see not much followed by a boom in construction. But do you have any views at Proptrack in terms of how the housing supply challenge is going to track over the next year or over the rest of the decade?
Yeah, I think when we look at this kind of current housing shortfall, unless something significantly changes, which it doesn't look like it is going to at the moment, we are going to see that housing shortfall persist. I mean, you kind of did the math there in the intro. We know that based on where population growth is and based on the number of homes that we're currently completing, we're we're seeing this persistent mismatch, right? And I think that housing shortfall is going to be one of the factors that is going to underpin home prices over the next few years. I mean, we know that since the onset of the pandemic, rents are up around 50% nationally, prices are up around 45%. In some markets, that's actually closer to 80% for both. And vacancies have been at record lows in most capital cities for much of that period. And it is really reflective of this environment where we're continuing to see strong housing demand really outstripping the supply of available housing. We know that the residential construction industry really remains challenged by capacity constraints, high costs, high financing costs and the like, and that consequential tight housing supply is ongoing and is continuing to exacerbate already high rents and house prices. You know, we've seen that interest rates have increased substantially since May 2022, and although prices did fall in some of the capital city markets for a period of time in 2022, that pretty quickly reversed in 2023, I think, with this mismatch between supply and demand, really one of those drivers as to why we saw that this dynamic in the housing market with prices continuing to lift really continued to offset this higher interest rate environment that we have seen. We know that I guess planning and zoning restrictions have made it really tough to deliver on the number of new homes that we need and in the right locations. But we've also seen these really acute kind of issues relating to labour shortages and persistent cost pressures. So I think unless we really address some of those barriers to home building right at that acute phase as well, we're simply not going to deliver enough new houses or apartments, or it will be very difficult to do so. We know we're tracking kind of well below that 1.2 million forecast, and building activity really continues to remain very, very constrained at the moment.
Pretty tough out there, isn't it? Especially when construction insolvencies have been so high, and there's probably more lucrative projects in infrastructure or commercial maybe. I think particularly medium density projects at the moment, a lot of them maybe being approved but not going ahead. I think it's difficult to make them stack up with construction costs and interest rates where they are. So that seems to be ongoing for the time being. Now, for 2025, I know it feels almost wrong to be asking about things after Christmas already, but do you guys have a kind of an outlook for what to expect over the following calendar year, and maybe some of the things we should be watching out for?
Yeah, I mean, it's a bit like that, isn't it? This year's just flown by.
Yeah, I haven't done any Christmas shopping yet. It's way too early.
Yeah, so I mean, our forecasts at the moment as they currently stand are out for the 2025 financial year. So we're looking at growth between 3 and 5% in Sydney. So that's a continued slowing from what we saw in the previous 12 months, which we think still looks relatively reasonable, and growth in Perth, Adelaide and Brisbane a little bit stronger, but also growth in those markets slowing. Now, I think it's going to be quite interesting next year. We're obviously going to see, or we're likely going to see probably at some point in the first quarter of next year, interest rates beginning to move lower. Typically, when interest rates move lower, we do see an uplift in housing market activity and an acceleration in price growth. However, I guess I'm a little bit on the cautious side, kind of this easing cycle, just given where we're entering from an affordability standpoint. And in the context of what we've seen over the past couple of years with prices in most markets really having lifted quite substantially, despite interest rates being a lot higher and affordability also having deteriorated quite significantly, I think we're probably not going to see that same uplift that we have seen in past easing cycles, but we probably will see a small uplift, but just that affordability starting point is probably going to weigh.
It's a good point. If you look at a graph of borrowing capacities versus housing prices over the longer term, we've sort of, it's almost like we've been sort of elevated above where you might expect things to have been. And I suppose that's been driven by the shortage of housing. And maybe people should just temper their expectations a little bit based on, just the general affordability in a lot of housing markets, and not just in the capital cities now. It applies to a lot of regions as well where prices have shifted through the pandemic. Eleanor, we'll put links in the show notes to some of the Proptrack reports. I would highly recommend. People often ask me where to go for market research and special insights. Always very professional media releases and reports that you guys put out from the REA Group data. Is there anything else that people should be looking for? Should they be subscribing for a newsletter or updates from you guys?
Yeah, so we've got the Proptrack Insights Hub, which can easily be found at proptrack.com.au. And then there's all the insights and various reports as well that we publish regularly that people can stay abreast of. We've also got a weekly economist update that goes out as well. And if you head to that proptrack.com.au website, there's a link there where you can subscribe to that weekly note.
Fabulous. When I had Cameron on the show earlier in the year, I said to him, these are always our most popular episodes. And I wasn't just saying that. It's definitely people love to get the insights from you guys with the handle on the real-time data and what's actually going on out there. So thank you so much for coming on. Really appreciate it. And look forward to chatting again soon.
Thank you for having me.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.